Hey, how's it going? It's Scott, the home loan guy, mortgage broker at NMLS 352721. So it is January 2026, and it has been a great year last year for people that were looking to get into homes, buying houses. We are seeing affordability become a little better. We're seeing rates coming down, which has been great. We had a nice trend over the last half of the second of 2025, where we just saw rates continue to move down. The big question I have from people is asking me, where are rates now? Where are they going? Is it the right time to refinance? Maybe they bought a year and a half, 2 years ago. They've got a rate in the high sixes or maybe in the sevens. And I was able to refinance a lot of people at the end of the year last year into loans that were back into the low sixes. And we were even starting to see a few people dip into the fives, which is great. I did quite a few loans in the high fives. So rates have been all over the place. We've had a lot of movement happen lately, and it's very volatile. There's a lot of things going on internationally that can actually affect our rates. So if everything from what's going on in Greenland to Venezuela, Iran, all these different areas, the different things that are happening internationally can affect where rates are. And the way that works is there's a lot of sentiment on where the safety is to put your money. So I would think of it, there's either stocks or there's bonds. That's pretty much where most people put their money. When the economy is doing well, we're all making a lot of money and the stocks are all doing really well. Everyone moves all their money into the stock market. And that causes mortgage rates to actually go up because mortgages are backed by bonds. The less money there in bonds, the higher they go, trying to entice people to move money into bonds. So as economic turmoil happens, as global international wars happen, as just things of uncertainty happen, people move to safety. They move out of stocks into bonds, and hoping to mitigate their risk. Bonds are very slow moving. There's very less likely to have losses happen aggressively as on the bond market as you would see in the stock market. So as kind of some chaos can happen in the world, that would cause people to move back into bonds. And we're kind of in this weird world where there is chaos, but people are not sure how it's going to shake out. How are the U.S. going to hold to this? How is it, internationally, how are people going to respond to things that we're doing? So there's kind of this uncertainty where there's a lot of belief that we're going to see a good economy going forward, which is making people move a little bit towards the stock market recently. But a lot of people believe we're going to see a breakout in interest rates because the things are going to happen and cause some safety movement back to safety into bonds. So hopefully we'll see some rates come down, but not nothing internationally bad causing that. But I do think overall where the economy is what we're seeing is we should see a downward trend. So let's take a quick look at where we are with rates. So this is a chart I use. This is MBS Live. It's a great service that a lot of mortgage brokers use. So with two things I look at, we're looking at the 30-year bond as well as the 10-year treasury. These are the two major factors of what we're looking at. And really, this one here is the 6-month history of what's been going on in the 10-year bond. And this almost mirrors exactly where mortgage rates have gone. So in the last 6 months, we've seen this nice downward trend. And this is getting us right into December, the end of the year last year. So through the entire year last year, we saw these nice overall trending down with these good little dips here that had some nice little dips. So these dips here, we were dipping into the high fives, which is great. But since then, we've had a little bit of an upward tick. And then just yesterday, we actually had a nice big jump on the market based off some of the stuff that's going on in Greenland. So with that being said, where are the rates based off? These are averages. These are not rates you would specifically qualify. Your scenario could be different, but we're looking at 30-year fixes around 6.2. I've got FHA loans 5.8, VA loans 5.89. These are just the national averages. What I see a lot of times is most of the rates I have available on the wholesale side as a mortgage broker, I'm generally going to be anywhere from an eighth to a quarter to sometimes 3/8 better than what I'm seeing on those national averages. But everyone's scenario is different. So if you're looking at the idea of should you refinance, does it make sense? The best thing we always start with is send me a copy of your mortgage statement of what you're paying right now. Use that. I can do an analysis and see what's available to you and make sense. The general rule of thumb is you want to have about 0.5% better on your interest rate. You want to minimize your costs. There's a couple of different ways we want to look at it. So I always try to give you a few different options. But if you think you might be interested in doing a refinance, reach out to me. We can run those numbers. Or if you think about buying a house and you just want to know what does it take to buy a house, how much can you qualify for, what does that actually mean for your monthly payment, out-of-pocket expenses, different programs, that's something I also help out with. So if you have any questions about home loans in general, feel free to reach out. I'm Scott, the home loan guy. Thanks a lot.